We're thrilled to have her back after a week's hiatus to discuss what has happened this week. Great to see you as always, Danielle. I mean, where do we start? 4% kind of day for the Nasdaq, a 4% kind of day for the S&P as of basically right now. You've been leaning on the short all year long, as we've spoken in depth about here. Where does it get to a point where we have to kind of say, okay, what do we do with the shorts at this point?
This week, especially with the Fed, I went into it pretty short and then I ended up covering on Tuesday because I thought, there might be kind of Fed relief rally. And we did get a little bit of a relief rally yesterday, right? And I was hoping that we would get a better short squeeze up to higher levels to add a bunch more shorts on. But this thing just keeps rolling and dying. And I mean, at this point, it looks like we're closer to capitulation than any kind of, decent rally we can sell into. So I think that we stay on the short side, but I think you have to do it as a day trade because at any moment in time, we could have an overnight gap up and a short squeeze due to the high short interest.
And that's a great point. And as you said, we saw yesterday, once that move started to happen and once that move started to roll, it was very violent back to the upside. But as you said, gapping down this morning. Let's focus on the Nasdaq here. As I said, a 4% kind of day for the Nasdaq. All the tech names getting absolutely crushed, including Apple, basically at day lows right now. When it comes to Apple, when it comes to Amazon, we know you love to trade Microsoft as well. Are they in the same boat here? I mean, do we need to see a bounce to get short, or do we need to see maybe a flush out to lower levels even to try and put on a longer term position?
Sure. Well, I mean, we can go ahead and look at charts. I love looking at the Nasdaq futures. Personally, I know a lot of people look at the composite, but this is a Nasdaq futures daily chart. And if you look at the way that this is broken down, I mean, look how close we are to the September 2020 lows. If that low breaks, which is 10,700, let's call it. And I mean, we're only 300 points from that, not far away. At that point, we're looking at a major capitulation move that would take us back to the highs of February of 2020. So, I mean, it's one of those things where it's like you look at Microsoft and you say, well, is it too late to short it? I mean, nobody wants to short on the lows of the year, right? You're trading at 242. But if the NASDAQ goes, Microsoft is going to go too. So, I think the next levels in Microsoft to the downside are going to be 240 and then about 227. I think you can keep trading it lower, but you definitely have to be careful because with the short interest, and look at this, the put call ratio I have up at about 1.18 today. It got up as high as 1.35. That's the highest it's been since March of 2020. So if there is some kind of catalyst, which I don't know what it could be, I mean, all of these could rally substantially.
A little bit about retail stocks here coming up in a second, but before we do that, is it the case? I mean, we've had so much success over the past 5 years, on the long side. When you see a chart like that, when you see a Microsoft chart like that, when it's clearly making lower highs, lower lows, lower highs, lower lows in this market, even on a daily time frame, do you need to see one of those break before you say, okay, this is not a short anymore?
Oh, absolutely. So, I mean, I can go back to the Microsoft chart here, and I 100% agree. I mean, we are in a weekly downtrend. We are in a daily downtrend. It breaks my heart to say because Microsoft is one of my favorite, what used to be bullish stocks, but this thing is a short. I mean, unless it got up above, I would say maybe right around here, around 275, and especially up above 290. That's the price point where I would say, okay, we can look at a reversal, we can look at going long, but until that changes, every time this thing bounces back up to around the 21 EMA is really where I like to look for short trades, which at this price point, that would be about 260. I mean, you just got to follow the trend. It's the path of least resistance.
There's a big event coming up tomorrow with options expiration, third Friday. We're going to bring in the guys here and talk about that just to wrap things up. But before we do that, retail stocks. I mean, a lot more people, it seems like, over the past couple of days throwing around that R word. the recession word, which is going to, whether we like it or not, affect retail stocks specifically. Give me your take here on this group. Is there one or two that you like maybe for another move down?
I like all of them. I mean, here's the thing. I've been looking at Amazon, right? Because I thought if there's anything in consumer discretionary that can go higher, it's got to be Amazon. Amazon split. Surely there's enough retail traders out there that are going to want to buy this thing at a discount. But look at it. This thing is a disaster. It just made new lows on the year again today. I mean, when I look at this space in general, I mean, you've got, let's see, Nike, that one's about to make new lows. You have Home Depot and Lowe's. I think those in particular, because they're, retail and they're also housing. I think those can be shorted on a regular basis. But I mean, there's definitely nothing in there that I can buy except for maybe I would look at Costco, but even that's in a downtrend.
I love the answer, Danielle. Thank you for coming on as usual. All of them. Oh, don't hurt me. I got shares.
I was like waiting for her to say something other than all of them.
I know.
That's a good mic drop moment. A good mic drop moment there.
It's cold. Look, but it's true. Like you're talking about the trend there being everything. Now, obviously, look, we just had the Fed on Wednesday, and then tomorrow was quad witching, right? So you have the second one, the largest quarterly options expiration. In addition, you have the quarterly rebalancing, which in this case is the semi-annual. Now, given the fact that we just had the Fed, and given the fact that we have quad witching coming in tomorrow, obviously I would suspect that this is about as high volatility an event as you might be able to see. Is there anything that you are looking at, at least in terms of maybe there'll be some expirations or maybe some short-term trades that people should be looking at here, or just abnormal volume going into it? Because I can't remember the last time we had this situation where we had a major Fed action on Wednesday, and on Friday we had a semi-annual rebalance, a quad witching. I've been trading a while, but it doesn't come to mind this particular situation. Is there anything that sticks out to you?
So normally what we do with these quad witching days in the options market is we go into the options chain and we look at key stocks, which are usually the highest traded stocks. Like, for example, I always use Microsoft as an example, but Microsoft, Apple, Amazon, Google, Netflix, these stocks, they have a lot of high open interest. And so usually you can try to pinpoint, around what value they're going to close, and you can kind of trade that in the options market. But this market is insane. There is no way that I am going to try to make a neutral trade between today and tomorrow, because there is a tiny, tiny, tiny little chance that the market would stay in one place. So for example, if you let's look at the SPX and look at SPX options. I mean, you could say, all right, let's go to the options chain and let's see if we have come on, give me my data. Let's see if we have, a specific strike price that's actually going to stand out here. Normally what we would do is we would say, okay, well, we've got a lot of open interest at the 3,600 strike. Let's try to trade it up to there. And for example, you do have right here a ton of open interest at the 3,700 strike. But I mean, I can't say that I would want to try to trade this thing up at all unless we had a major gap up overnight. The next strike to the downside is going to be 3,600. I think if you do anything, you try to focus on the downside and try to trade options expiration to that value that has a lot of high open interest, because that's what makes the most sense. But I wouldn't try to do anything neutral here.
Ms. Danielle Shay, always a pleasure. Thank you for coming back on once again here. People saying it's a fantastic hair day for you.
Thank you.
I know they're not meaning me or Neil over here. So that's some good talk right there. But okay, quickly here. Do you ever look at oil? I mean, that's one thing that we don't really talk too much about is energy. Is that something that you get sort of some of the people that you're involved with looking at, or do you have any opinion on what that looks like? I mean, I have the chart up right here. It's been pretty strong, but again, like a lot of these asset classes haven't held. Like nothing's been holding. Bitcoin, gold is sort of on the way down a little bit now. What do you see for oil, and is that something that you even look at?
So I don't trade oil by itself, but I absolutely look at it. And then I will look at the energy stocks. The main reason why I haven't been trying to buy them the past couple weeks is because I just felt like the trade was so crowded. And I just felt like, with all the politicians out there, they're trying to, help save the gas prices. I just feel like you try to make a bullish, energy trade, and there's going to be some kind of political news, and it's going to ruin your trade. So that's why I have been avoiding that sector overall. If you look at the way that it's trading in the past few days, I do not like it, because look at oil. You've got oil that, yes, came back. You were in a nice uptrend. You pulled back. Normally it would look like a great buy, right? But then when you go to XLE and you check out energy, even this sector has dropped like a rock, despite the fact that oil prices are incredibly high. So for me, I look at that, I just think it's a mess, and I'm staying out of it.
That's a tough ride there for that market. I mean, now gas, you probably know about this. I don't know what it's like where you are over there, but it was for the first time ever, I guess, $5 a gallon national right now on the national price there for oil. Do you ever play against, and the thing about oil, the only thing that I can think of here would be maybe a resolution with Ukraine and Russia. Do you ever take some of that kind of stuff into consideration? I know you're just talking about the crowded trade, but that could be something that sends oil maybe back down to earth a little bit.
Oh, absolutely. And I totally agree with that. And I think that if you're trading energy and if you're trading oil, you have to be looking at what's going on in Russia and Ukraine, and, supply and demand, and if the pipelines are open or not. And, if there's going to be a tax on the gas companies and all of those things, which is why it makes it such a specialized and kind of complicated area. Because when you look at energy right now, and currently what they're trying to do here in the States is say, okay, energy companies are making so much money, so let's just tax them more. I mean, do y'all really think that that's going to make the cost of gas go down? No, these companies are going to say, oh, we are getting taxed, we're going to raise prices even more. I mean, that's how capitalism works. So for me, I just think that the whole thing is kind of a mess. And I mean, you can definitely try to maybe buy some more energy stocks here because it's pulled back so much, but I just don't want to trade it.
I was Danielle Shay, VP of Options at Simpler Trading. I was looking up the next CPI reading. Danielle, give us your take here on what's to come going forward into next week, going forward into the next couple of weeks, as far as inflation is concerned, and what the overall market move should be going forward. What are you looking forward to?
So the main thing that I'm starting to focus on right now is earnings season that's coming up in July. I mean, I personally don't believe that inflation is going to just immediately start going down. I do think we're going to continue to see high inflation readings, and that's going to continue to impact the market in a negative way. But I think that the biggest catalyst that we have is going to be earnings. We've already had companies like, pick on Microsoft again, that's come out and said, hey, the strong dollar is impacting our profits. They're not the only ones. And once we have other major corporations coming out and saying, hey, guess what? We're revising earnings lower. We're not making as much as we were. We're seeing this economic impact. That is going to send the market even lower.
Could also be a good reason for another leg to the downside for a lot of these. That date is July 13th will be the June CPI reading. So for anyone who's wondering, CPI, the next one coming out July 13th. Danielle Shay, we appreciate your time. As always, great information. Have a wonderful weekend. We'll speak again soon.
Thank you. You as well.